Alright, hello and welcome to Camel Finance. I'm your boy Camel and I'm running a bit late today, so let's jump straight into this. I don't want to spend too much time on FTX because frankly I guess we're all sick of it by now, but I thought in the interest of learning something, these tweets here, which were kind of cryptic and spaced out over a couple of days, I think, this what happened thing, as it turns out, this may well have been to maintain the total tweets count, and the reason for doing this is it stops the algos from sweeping his profile and detecting that he has deleted tweets. So I wonder if he was covering his tracks and then replacing those deleted tweets with these ones so that it was harder to spot what he's done or what he was doing. But of course, these days, with so many eyes on him, he was never going to get away with this. But I thought that was interesting. I didn't know you could do that. Apparently you can. This contagion may well be continuing to spread. The Genesis exchange $2.8 billion crypto lending unit has halted withdrawals. There are rumours that they're going to be insolvent. So again, get your crypto off exchanges. Two more points to make on FTX before I move on. This is an unpopular opinion. I tweeted this a couple of days ago. I said, look, FTX, SBF, Alameda, Caroline, all of that lot, they're all going to go free. No jail. They're going to get away with this. And I said, the WEF looks after its own. SBF and all of his mates have held up their end of the deal. They've bought down this crypto exchange. They've stolen all this money. The WEF and the controlling people behind this are going to be able to buy it all up cents on the dollar. Gary Gensler from the SEC continues to protect his investors, also with no repercussions. This is just how the world works, unfortunately. And it seems that this is becoming a reality. Look, we're seeing Reuters printing things like SBF did the financial system a favour. I mean, this is absolutely ridiculous to print this sort of headline. We've also got Kevin O'Leary somewhere in here saying that
he also built one of the most robust platforms. We used FTX actively. It was a very robust platform that allowed us to get information on a compliant basis. So I really like what he built.
Would you back him?
The answer would be yes.
So absolutely ludicrous that you would invest in this guy again. But of course, this is how the game is played. Okay, this is how the game is played. So anyway, that's enough of that. Look, this is becoming like a bad breakup at this point, I think. I get it, people have been hurt. I get it, emotions are high. This is a nasty thing that has happened. It's not good for the industry. It's possibly not over yet. But this really is like a bad breakup. I think we should move on. I think we should cut this off and try to grow and come off of this stronger. So one last point is that apparently the SBF and Caroline are going to be held accountable and somebody is going to leak this thing here, these two words. So, I don't know, come on Camel, we're better than this. Capitulation volume has spiked, and this is the highest capitulation volume ever, okay? Even higher than C19, even higher than this bear market, higher than all prior bear markets. So, was that enough? Can't rule out further downside, but at the moment the low is still in, and whilst the low is still in, that opens up upside as well as downside. People like Charlie Munger, who is Warren Buffett's right-hand man, the brains behind Berkshire Hathaway, is coming out and saying he likes central bankers and he hates Bitcoin. But don't listen to what they say. Look at what they hold. They hold billions of dollars of Nubank, and Nubank has an investment unit called New Invest, which allows users to invest in crypto exchange traded funds. Here you go. Look, Berkshire Hathaway invest $1 billion in Nubank. So don't listen to what they say. Look at what they do, and what they do is increase their exposure to cryptocurrency. Binance has just gotten approval to offer Bitcoin and crypto services in Abu Dhabi. Bitcoin will still get to $250,000 by early next year, despite this FTX collapse, according to the billionaire Tim Draper. So maybe this is a little bit high. We'll see. Do you think this will play out in Bitcoin? But this is kind of what I expect to happen. Unless we lose this low from back here, then this is most likely what's going to happen. Of course, this becomes invalidated, and so does the Wyckoff spring if we lose this low. But until we lose this low, then this is most probably what's going to unfold. Nayib Bukele, the president of El Salvador, is saying that they're going to buy a Bitcoin a day starting tomorrow. So El Salvador are buying the dip. Got an interesting thread here from Raoul Paul, just an update to Metcalfe's law model for Bitcoin. The model is a total dollar value exchange monthly multiplied by the number of active users and has a correlation of 97% to the total market cap of crypto. Network activity peaked in 2020 and again in 2021 and has been drifting lower. The slow trajectory in decline in network activity is why liquidity cycle correction in magnitude has so far been less than previous examples. It also prices the network correctly in value versus 2018. For the network value to rise from here, we need to see the total value transacted increase or the number of active users increase. He says, note how big the number of active users was in 2018 and the number who left in 2019. So you can see that here, massive amount, and by 2019, not so much. The bear market is very different. as users have remained broadly stable and deeper adoption takes hold versus pure speculation. So this market is maturing, and the people involved in this market understand it increasingly more. The total value transacted is down as bigger institutional players remain on the sidelines, but on average it has remained around the peak of 2018 levels. 2018, however, was a retail boom, but 2020 onwards was retail plus institutions, which suggests deeper adoption. When liquidity returns, which is the biggest driver for institutional allocations, the network value should rise, which then brings in more investors, or vice versa. The number of investors rising will bring in more investors, which creates this multiplier effect, giving exponential returns. So once this thing gets going, expect it to start exploding. In bear markets, the value transacted goes down, but the number of active users remains more elevated, which is ongoing adoption. And when adoption rises, multiplied by the value rising, prices go exponential due to the mathematical multiplier. Said another way, users times uses equals an exponential increase. The market is actually currently doing a great job at pricing in Metcalfe's law of network adoption. Do you remember 9 days ago I said that there's this guy, they might bring back this president? I said, I wonder if that's going to happen. I wonder if this could be a catalyst for markets. Well, as it turns out, he has announced he's going to run for 2024. Unfortunately for him, I think he's going to be the fall guy. I think they're going to, he's going to run. Probably they'll swap him in because everyone likes to bring back the champions and stuff, right? That's how the politics game is played. But then he's probably going to get lumbered with rolling out the CBDCs and all of that stuff. The media has not hesitated to start bashing him already. Let me just make something clear before I continue with this. I'm not pro this guy. I'm not pro anything, apolitical completely. So just so you know, I have no political stance, especially because I'm an Englishman and this is all American politics. You can see they are saying that he tried to overthrow the results of the 2020 election and inspired a deadly riot at this place in an attempt to keep himself in power. So yeah, the media not hesitating to set this guy up as the fall guy. I think likely this is what's going to get blamed on him. I don't know. We'll see how this plays out. It was pointed out to me that we should be keeping an eye on Japan. Okay, the Bank of Japan governor is expected to retire in April 2023, which could coincide with Congress banning stocks right here, right at the top. This could be a change in policy soon after, and therefore this is our Lehman moment / excuse to bring the whole thing down. And like I said, could possibly coincide with a ban on Congress owning stock that I've so often referred to. So need to keep an eye on that. Over in China, the Chinese stock market has already seen a 25% run in November. A potential China reopening narrative is slowly starting to take hold of sentiment. So I've got a bunch of charts here from Game of Trades. You can see here that it's starting to look more and more convincing, like we might have a bottom in stocks. The S&P 500% of stocks above their 200-day moving average has just crossed the 50% threshold, and this setup looks incredibly similar to 2015 and 2016. Back then, a massive rally followed. Is this time going to be a repeat? So you can see here, similar look, massive rally, similar look. Are we about to start a massive rally? I personally think so. Global fund managers are the most bearish in history, according to the Bank of America survey. They were extremely bearish back in 2008 and March of 2020. These fund managers tend to be the most bearish at the bottom. And it's not because they don't know what they're doing. You could make an argument that many of them don't know what they're doing. But remember, hedge funds, fund managers, they're trend followers. They are not in the business of trying to catch bottoms. They wait for a clear trend change and then they hop on. So they're most bearish because they've been right to be bearish following this trend down. But of course, eventually the bears will be exhausted. This trend will reverse, and then they will all wait for a clear sign of reversal before pouring back into the long side. Tech has broken out this textbook inverse head and shoulders pattern, and this sets up XLK for a potential 10% run from its current level. Tech has been lagging, but I do expect if we are going to get a melt-up scenario, then tech is going to play a big part in this. Is this the early warning sign that tech is about to outperform? Look, you can stay stubborn, you can stay bearish, okay? But the DAX is working its way up to a blow-off top. You can see here, look, these are two massive weekly candles. The melt-up is certainly in play, although I am not one of these people that is celebrating this move too early. I want to play this one day at a time. The S&P 500 is reaching its 200-day moving average, and this is a critical level to keep an eye on. So you can see here, we are coming up to that 200-day moving average. Likely there's going to be some reaction, some chop around here. But if we can flip this into support and then start to move up, for me, that will absolutely confirm that this melt-up thesis is indeed playing out. At the same time, the Dixie coming into some support. I'll hop into the charts in just a minute. I've made a couple of changes to positions. Some level of dead cat bounce here is expected, as I've been saying, so I'll show you that in a second. And speaking of further bullishness, this is the US 10-year yield, okay? Breakdown, retest, and rejection. So MACD confirming, about to cross below the zero line. Is some level of reaction or dead cat bounce here possible with the dollar? I think so. But ultimately, this is a risk on look, okay? So long as this doesn't rapidly recover and make a new high, then this is risk on. I want to sidestep and go off on a tangent just for one slide here. I just wanted to bring this to your attention, not really related to anything we've covered so far, but the G20, their leaders have just signed a declaration which states that these things here, these special passports, will be adopted to facilitate all international travel. This means any one of these things the WHO determines you should have, you will indeed need for international travel. So anyway, I'll let you go down that rabbit hole in your own time. That is beyond the remit of today's video. So here we go, taking a look at the dollar. Dollar, like I said, I think some level of like dead cat bounce, maybe not as high as 110. I wouldn't be surprised if it makes it up to 107, 108, just a few bucks, and then I think it can roll over. So that remains to be seen, but that's what I'm sort of expecting to see. As a result of this, I'm currently short gold. So I did flag this. I said, if we break down from this trend line, which we have, then I will flip short. So I am currently short gold, and it looks something like this. Now, how low down this goes, I don't know. Something else I wanted to point out is that I am not sure at the same size. On the way up, I had full exposure to this long side. This could well just end up being a very small bull flag that then breaks out again. So this is about a quarter of the size this short than it was on the way up, because I don't want to fight the trend, okay? This is a trend change. I think it's hard to argue this is not a trend change. As you can see here, we have broken out of this, and this has been a very powerful move to the upside. Of course, as I said, I expect the dollar to get a dead cat bounce and roll over. So I would expect gold to do the opposite, a little bit of a pullback and then start to thrust upwards. But just in case gold decides to give back most of this move, then I have this short open. As you can see, the risk is absolutely tiny here. And the new strategy now is to push this short and see what we can get and draw a little downward trend line like this and then re-enter long. We'll flip long on this. So if it's only 4 days and then we break out, we'll flip long on that breakout. If, however, it decides to come all the way down here and shake this move out, then that's where I'll be looking to buy. And potentially this could be the top for the cycle. We could get something like this that drops into the next daily cycle low, maybe like down here or something. And so that is where I'll be looking to get long again. But this was very nice, easy profit, straight up in a straight line, as you can see. So I take that. We've had a trend line breakdown. Now it's a case of small short position whilst we're essentially neutral, waiting to see where this pullback goes. Because like I say, if it's only going to be short, then we can just flip long again and we'll go. But it looks kind of overextended to me. And if it's going to decide to just come all the way back down here, maybe even retest this blue trend line, then I don't want to give all that profit back. In fact, I think my stop was back here. So I don't want to give all of that back. So I've managed this trade. That is that. The Wyckoff spring, is this what we're going to do? I keep bringing this down and saying, is this what we're going to do? Maybe. So that remains to be seen for now. Hopping over into this Bitcoin chart, you can see we haven't yet taken up this low. So does that mean we're going to go sideways? Are we going to recover? If I flip back to the gold chart and zoom out a bit, you can see that we had this big level, okay, this big red level here, the horizontal line. You can see we kind of broke down below it and then kind of chopped around it, and then we exploded to the upside. So is that possible for Bitcoin? You know, we've lost this big level here. Are we going to chop around here for a bit and then explode to the upside? I think quite possibly. And all the while we're above this low, then that seems to be in play for me. Not really interested in any other crypto type positioning at the moment. I want to see Bitcoin recover this blue line, this low from back here at 17.6, and ideally above this wick at 18.2. Once I've seen that, then I think we can start entertaining everything else. I still have my MATIC position. Where is it? Just about. So sitting around break even. Again, we really need to see Bitcoin get going before this can move, in my opinion. So not really much to say about that. The same is true of Coinbase MicroStrategy. Are we going to, continue to chop around? Does the low remain the low? That remains to be seen. If for some reason this low is taken out, then we'll just go back to the drawing board. Potentially we've got this big blue downward sloping trend line. Is that a log scale? Why is it drawn like that? Ah, yeah, it's on a log scale. So yeah, maybe we can trade the breakout of this. That remains to be seen. For now, we'll continue to play patient and see what happens with here. Not going to go jumping in front of any trains or buses. Tesla, if we get stopped out here, then I'm probably going to redraw this trend line like this and start again. So that's Tesla. For now, we'll just continue to push this trade. It looks like we're going to have to pay a stop on this one. Apple still kind of hanging around break even, so we'll see what happens. Could be, again, if we get stopped, then maybe we have to redraw this trend line out here and try again. But that's fine. For now, not so worried about Apple. FTSE 100. This is a bit of a concerning look. This is indicative that maybe we have to see a bit more of a deeper pullback. All the while we're above this blue line, then this isn't a problem. But if we lose this blue trend line at the top, then this becomes a problem pretty quickly. I'll clean this chart up a bit. The VIX still refusing to spike, as you can see. Do we need to redraw this trend line? Perhaps, but I haven't done it yet. I'm noticing if you look at this blue line here, this blue upward sloping support line, broken down, fake out above it, retest, looking to resume off potentially. So a couple more days, we'll see what happens here. US equities are in the red slightly yesterday, and the VIX still refusing to spike. So I think this is speaking to more upside in the stock market. Dow Jones, is this going to end up being a trap? Or are we just going to consolidate here before ripping higher? That remains to be seen at the moment. NASDAQ coming in for that retest of this line. I wouldn't be surprised to see it kind of fake out to the downside and then go, but long and strong continue to push. If this turns out to be the low, then we're in right at the bottom, as you can see. So I really don't want to go like ruining this trade or interfering with it too much, because there's a potential here, especially as I showed you earlier with the tech starting to break out. There's the potential here that this could rip higher, and then this would be an absolutely epic trade from bottom to top if we get that melt up scenario play out. And the same is kind of true of the S&P 500. A little bit of chop here. I think we ought to see a run on this high. I think at least this high, and if not this high. I think also there'll be a lot of liquidity trapped on the breakout of this. I think a lot of people will jump in here, and then all this buying in here can be distributed up here. So for now, long and strong and continue to push this, but we know that we're probably going to run into some resistance up in this neighborhood around 41 to 4,300, assuming we can get there. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, turn the notifications on if you want to see how I deal with these markets in real time as a pro swing trader. In the meantime, if you have anything to say, throw it in the comments. Look after yourselves, take care from me, all the best, cheers, bye.